Hello, hello, everyone. This is Gerald Celente, and we're really honored today to have with us Mr. Peter Schiff. And I've known this guy, the first time we met was going back to 2000, I think it was 2007 and 2008. And both Peter and I had warned about the panic of '08, and we had just finished doing interviews with ABC TV when it was a big show back at the time. And after the show, we're outside talking, and I've been following Peter ever since. And this man has been on top of the trends in gold and precious metals and where the markets are going and the economy like no one else I've seen. So thank you very, very much, Peter, for being on with me today. And please tell people more about Euro Capital.
Well, Euro Pacific Capital, I am a registered investment advisor, broker-dealer, so I help people invest their money, whether I help them do it themselves by giving them individual stock recommendations and helping them access a lot of the foreign markets that many of the traditional brokerage firms really don't provide access to, or more specifically, I manage money for people where I build the portfolios for them, and I take care of all of the management of the accounts. I make the trades and just charge them a fee for those services. And I think it's very important that people understand the economic environment that we're in. A lot of people talk about inflation, but don't understand that at its core, it's really a tax. It's just the way the government chooses to fund its spending by creating money instead of raising taxes. And so the tax that we pay is inflation. Prices rise as a result of government money printing, and the money is printed to fund deficit spending. But if you want to avoid the tax, you have to avoid what's being taxed, and that's US dollars and dollar-denominated financial assets. So you need to invest abroad, you need to get out of the United States, you need to be in real assets, companies with real plant and equipment on their balance sheet, real resources that they own. They have businesses, they sell products that people need to buy so they can raise prices, not products that people want to buy only with the money they have left over once they finish buying what they need to buy. You want to have dividends that come to you in appreciating currencies, and you want to really have exposure to hard assets, commodities, industrial materials, agricultural commodities, precious metals. These are the types of investments that will do very well in stagflation, which is really what we have. We're going to be in recession soon, but inflation is only going to get worse.
Well, that's great. Well, I'm calling it dragflation. I think the economy is going to drag down and inflation is going to keep rising. And with the, what currency would you say, where do you think the dollar's going?
Well, certainly all fiat currencies are going to lose value. I mean, all central banks are creating inflation, but I think the dollar will lose value relative to other fiat currencies, but all these currencies will lose value in real terms. So people around the world are going to see a loss of purchasing power of their local currency. The best currency to own would be not a currency at all, but real money, which is gold. Gold and silver, I think, will continue to retain and, in fact, even increase in purchasing power over time. But also, I think it's important to have money in productive dividend-paying assets. You can't just have everything in gold and silver. I think over the longer term, you'll get better returns from productive assets. It's just that in the U.S., those productive assets are overpriced, and the U.S. economy is headed for a dramatic collapse, which is not going to be good for U.S. assets. And inflation is going to wipe out the value of U.S. dollar-denominated debt.
With the sanctions that they've put on Russia, I mean, Biden came out and said, that the sanctions, don't deter anything. And yet they put these sanctions on, and inflation is skyrocketing. It was going up before then, and now it's out of control.
Well, it was going to be out of control anyway. I mean, now I think they have a convenient scapegoat where they can blame it all on Putin. But Putin, you can blame Putin for a lot of things, but U.S. inflation is not one of them. We're creating the inflation ourselves. It's the U.S. government, it's the U.S. Federal Reserve. And I don't condone what Putin is doing, but I do think the sanctions are going to backfire, which is usually the case with whatever government does. I don't think they're going to achieve their desired objective, but I think they are going to ultimately weaken the U.S. economy even further and ultimately put into jeopardy the dollar's role as the reserve currency even sooner than what otherwise would have been the case. I mean, I think the dollar was on its way out as the global reserve currency, but we just gave it a bit of a push, and maybe the rest of the world will give up on the dollar sooner rather than later.
Well, now that China won't come out against Russia, and the two of them are uniting more and more, and India won't come out against Russia either. And when you're looking at China, one of my sayings is that the 20th century was the American century, and the 21st century is going to be the Chinese century, because the business of America has been war, and the business of China is business. And they refuse to take a negative stance against Russia. So do you see, the yuan going much higher? Because right now it accounts for very little in global trade.
Well, I think the Chinese currency is going to appreciate rather substantially against the US dollar, and I think that's going to be very good for the Chinese people. It's going to be horrible for the United States because it's going to make Chinese goods dramatically more expensive for American consumers, so most American consumers will have to give up on those goods. We don't have the ability to produce the goods ourselves. It'll take a long time for that to develop. But look, if you look at China, Russia, and India, I mean, right there, you're close to half the world's population just in those three countries. And you have tremendous economic productivity going on in those countries. You have China producing all these manufactured goods. You have tremendous resources production out of Russia. And there's a lot going on in India as well. So, they don't really need the rest of the world. I think those three countries could do very fine, even if they were isolated among themselves, which they won't be, because they'll also be trading with a lot of other parts of the world, including South America, Africa, other parts of Southeast Asia. So you really just have the United States, Western Europe, and maybe the rest of the former United Kingdom, Australia, New Zealand, Canada, those countries that would kind of hold tight in this anti-Russia sanction mode. But the rest of the world could do very well without those countries. And the problem is, we